Hello everyone, welcome to FriendsFOREX, where we guide you on the journey to financial freedom through the Forex market. I am Friends Okwudiri. I am excited to help you unlock the potential of the Forex market. If you are new to Forex trading, you're in the right place. Let's dive in. Forex trading, or foreign exchange trading, is the world's largest financial market with a daily trading volume exceeding $6 trillion. Imagine the possibilities. In this market, currencies are traded in pairs like Euro, US dollars, or Great Britain, Japanese yen. And it operates 247, 24 hours a day, 5 days a week. This global market offers endless opportunities for traders like you to profit. Understanding key terminologies is crucial for your success in Forex trading. Let's break down some basics. Currency pair. Currencies are traded in pairs. For instance, Euro US dollar, Euro USD, which represents Euro versus the US dollar. The first currency is the base currency, and the second is the quote currency. When you are buying a currency pair, you are in fact buying the base and you are selling the quotes. Conversely, when you're selling a pair, you are actually selling the base and you are buying the quotes. Now, secondly, another terminology, PIP. A PIP, which stands for percentage in points, is the smallest price movement in a currency pair. For most pairs, a PIP is actually the fourth decimal place. For example, if the Euro US dollar moves from 1.1050 to 1.1051, that is actually a move of 1 pip. Alright, now pips are crucial for measuring price changes and calculating profits or losses. We have the lots. Lot is the size of a trade. In Forex, a standard lot is 100,000 units of the base currency. However, there are also the mini lots, which is 10,000 units, and the micro lots, which is 1,000 units. The lot size determines the value of each pip movement. Every movement of the pip, the lot size determines the value depending on the lot size you used in your trading. Remember, the lot size is the size of your trade. Also, we have something called leverage. Leverage allows you to control a larger position with a small amount of money. For example, leverage can give you a 1:100 leverage. That is to say, you can control 100,000 US dollars with just 1,000 US dollars, like multiplying it by 100. That is leverage. Now, we have different levels of leverage depending on your broker and also your trading country, depending on the broker terms and condition. Also, leverage, it can actually amplify your profits. But if the trading goes bad, if it's not in your direction, leverage can actually increase your loss. It's a double-edged sword. It's very important to use it wisely. And it's highly advised that beginners stay away from over-leveraging. All right. Now, another terminology to look at here is the spread. The spread is the difference between the bid price. The bid price is actually the price at which the markets will buy, and the ask price. The ask price is the price at which the market will sell. In total summary, the spread is the difference between the bid and the ask price. You can see is the difference between the buying price and the selling price. For instance, in the Euro US dollars, the bid price is 1.105 and the ask of the price is 1.102. The spread here now is the difference. The difference here is actually 2 pips. Do you get it? Now, you can call it the cost of trading. Lower spreads are typically favorable for traders. It's essential to note that when you want to pick a broker, you have to look at the spread, because most traders, we don't want spreads that are high. We want lower spread, lower cost of trading. So that's that on the terminologies. Let's move forward. How to get started? Are you ready to start trading? Here's a quick guide. Firstly, from the description, my recommended broker, Xness, you click on the link, you register, you sign up, you verify your account, you create a trading account, you download your MetaTrader 5, you link it. To link your MetaTrader 5, to connect your MetaTrader to your Xness account, that is a detailed video. You can check out our playlist on how to, a playlist tagged how to playlist. check it. Any guide you need is there. You watch it, and any question you need, you just don't hesitate to ask. Now, a Forex broker is a gateway to the Forex market. They provide the platform for trading, for buying and selling currencies. They offer you leverage, enhance your trading power. They supply tools and resources for informed trading. Choosing a reliable broker like Xness is vital for your trading success. Before choosing any broker, ensure to do your due diligence to check and research funding, withdrawal, spread. Make your proper research. But here, I am using Xness, and that is my recommended broker. Trading times and sessions. The Forex market operates 24 hours a day, divided into 4 trading sessions: Sydney, Tokyo, London, and the New York session. Each session has unique characteristics and trading opportunities. Knowing these times helps you plan your trade effectively. Let's do a quick exercise. Write down the major trading sessions and their times in your own local time zone. This practice helps you plan your trading schedule and spot the best trading opportunities. So do this and drop it as a comment. Trading principles. Now, success in trading isn't just about the knowledge, it's about the principles. Here are some to live by. Very importantly, discipline. Stick to your trading plan and avoid impulsive decision. 2. Patience. Wait for the right opportunities. Thirdly, risk management. Always use stop loss orders and never risk more than you can afford to lose. Fourthly, continuous learning. Stay updated with market news and constantly improve your trading skills. Never stop learning, never stop improving and building up yourself as a Forex trader. Have questions or topic you'd like to cover? Leave a comment. Until next time, happy trading, and may your journey to financial freedom be blessed. Hallelujah. Let's keep going.